Hello and welcome. Today we are going to be talking about how taxes work in the context of an LLC, or otherwise known as a limited liability company. So, welcome. If you are new here, my name is Taylor Darcy from Think Legal, where I help you create the business of your dreams. So, welcome. Thank you for joining me. Let's get started. First, what is an LLC? An LLC is a limited liability company. It is a legal entity for your business, and it provides a liability shield against claims and creditors against your personal assets. So, one of the benefits of an LLC is that you enjoy for what's called pass-through taxation. What does that mean specifically in the context of the IRS? The IRS considers a single-member LLC what is called a disregarded entity. So it's a hybrid entity in that you have a liability shield, but for taxes, unlike a C Corp, where there is double taxation, the LLC, all the money that you earn from the LLC gets passed right through to your individual taxes. So there is no middleman of the corporation where there's double taxation. And I'm not going to go into that a ton because I just want you to understand that the pass-through taxation means all the income that you get is or loss, profit or loss, that's the benefit of this, can be passed through the LLC to your individual taxes. And it is a great entity for its simplicity and its ease of use because it doesn't require the same level of corporate formalities as a corporation does. So remember, a single member LLC is, for the IRS purposes, a disregarded entity. So they don't count it. It doesn't count as a separate entity for that purposes for a single member LLC. A multi-member LLC is somewhat of a disregarded entity, but not really. It's taxed as a partnership rather than a disregarded entity. So that means that unless your operating agreement says otherwise, or you've agreed otherwise, they will tax you at 50-50 if there's two people in the partnership. So you need to make sure that your operating agreement outlines if there's a different percentage, 70-30, 60-40, whatever it is, 49-51, however you work it out between you and your partner, that you have it clear in the operating agreement so that when it comes taxes, that the income is distributed according to that ownership that you've agreed to. So that's a multi-member LLC. So that simply means more than one LLC member, it could be one, or it could be two, could be 3, 5, 10, however many number. Now, we're not going to go into this video about member managed versus manager managed, but we will talk about that at a future point. But for today's video, we're just talking straight up tax. The next thing is that an LLC has the unique benefit that you can actually pick an S Corp designation. That's very different because you can't pick this as an individual. So that's another really great reason why an LLC is a perfect entity. And an S Corp designation for an LLC, again, it's a tax designation. Keep that in mind that we're talking about, it's not really a corporation, it's a tax designation. That's something that people they mistake all the time. And I want you to be clear that it's a tax designation, which means that you can have it and lose it as well. It's not something that you just get forever if you don't abide by that. Now, you have to meet certain requirements in order to be an S Corp designation for an LLC. It has to meet all the same requirements as a corporation, which means you can't have any non-resident aliens. There can't be any foreign investors. You can't have more than 100 members, that sort of thing. The other thing is that your salary becomes tax deductible as opposed to the pass-through entity. All of the incomes gets passed through under an LLC. The simple version of it is it becomes an expense item instead of it just being like all that income gets passed to you. That being said, you must also pay yourself a reasonable salary. What that is depends on your industry, who you're talking about. that type of thing. So keep that in mind, that you have to pay yourself a reasonable salary, and you basically put yourself on payroll as an employee of that corporation in order for that salary to be tax deductible. The last, but certainly not least thing is that each case, each scenario is fact specific. In some instances, an LLC tax status is going to be more advantageous depending on what you're doing. And in other instances, the S Corp is going to be the better designation. You want to talk to a CPA in your local area to just find out which one makes the most sense for you, because the last thing you want to do is to take the wrong one and make it and hurt yourself for your taxes. This does take some work. This takes some extra planning on your part. It can't simply be that you just pick one and go with it and hope for the best. I never recommend doing that, and I can't answer for you which one is the best, but I recommend checking with your CPA. Those are two professionals that I highly recommend, an attorney and a CPA, in order to really create the business of your dreams, that can guide you during the process to make sure you're complying with the law, that type of thing. If you've gotten value out of this video, please don't forget to hit subscribe and like. We go live every weekday, Monday through Friday at 11 a.m., except for holidays. Please stop in and join me. I would love to talk with you and answer any questions directly. And I hope you have a great week. We'll talk to you soon.